Hi everyone, let's go through my preferred bullish and bearish scenarios, including my new one on the medium time frame and low time frame with potential trading setups. Also, if you are a regular viewer, please check the pinned comment. So starting with the macro bearish scenario, where the bearish scenario here, we're looking for a 5-wave to the upside in an impulsive structure. And then the correction is a W, X, and looking for 3 waves to the downside in a wave Y, with the minimum target being the 0.618, currently sitting at about 12.6K. But it would also be a nice backtest of this area over here that we haven't seen since 2020. Now, what I don't really like about this scenario though is this wave 4 over here. Usually a wave 4 is longer compared to a wave 2 in Elliott Waves. However, on the Bitcoin chart you can clearly see that this wave 4 over here is a lot shorter in time compared to this wave 2, which is something that is very, very rare and not really something I like to see. If you then look at the correction over here, we have 3 waves in W, 3 waves in X, and usually the minimum target of wave X is the 0.382 over here, sitting at 29.6K. Also in confluence with the support resistance area we had on the chart for Bitcoin over the past couple of years. So the potential trading setup for this particular scenario is that one can enter the shorts in this area over here, stop loss safely above, trading it to the downside for a very big swing trade. If we then look at the bullish scenario, which at the moment looks better in my opinion, we have a 1, 2, 3, so wave 3 is ending over here, then this is a wave 4, and then we're looking up for wave 5, where the most common target for wave 5 is between the 1.236 and the 1.618, which is between 98K and 174K. So wave 2 bounced on the golden pocket over here. People were very panicked because this was the COVID dump, but for me this was simply a wave 2. Before then a very big move to the upside in 3. This wave 4 is a WXYXZ, which I will show in a second, bouncing perfectly on the 0.5 fib, pulled from the low of 2 to the high of 3, which for a wave 4 is also the maximum target. Also, the end of wave 4, the exact week, was on the 0.618 fib time, taken from the low of wave 2 to the high of wave 3. And also we had a volume peak at the lows over here, a high amount of volume coming in right at the lows, just like here with wave 2. And these high volume moments can signal reversal areas to the upside. So this could be the beginning of a bullish move to the upside in a wave 5. The rare targets for a wave 5 are basically between the all-time high and 98K, the yellow box over here. And we had 2 trading setups. The first one is, well, expecting this to be a wave 4, so the entries are above the 0.5, stop loss then below the 0.5, as candles are not allowed to close below the 0.5, and then you trade it to the upside. But the more safer option was to wait for a retracement like the one over here, or maybe one coming still, and then entering the longs in the retracement, stop loss below the low of 4, and then trading it to the upside as well. If you then switch to the high time frame counts, we zoom in a little bit. We first talk about the bearish scenario here as well, where we then have the W expanding flat in the X and then expecting a 3 wave in the Y. Now this expanding flat is an ABC structure where wave B ended perfectly in the target area for a wave B in an expanding flat, which is between the 1.236 and the 1.38, for then an impulsive move to the upside in a wave C. As you can see, this impulsive move, I counted it like a 1, 2, 3, 4, 5, and then inside this wave 3 we have a 1, 2, 3, 4, 5 over here. Now the most common target for a wave C is in between the two 1.618s that you see over here, which is basically between 27.8K and 34K. And the most common target for a wave 5, pulled from the high of 3 to the low of 4, are the fibs you see here on the right side, the 1.236 and 1.618, and these are sitting between 26.8K and 29.6K. Now the end of wave 5 might already be in actually. So, and I will talk about that with my preferred scenarios on the medium time frame and the low time frame. So the end of 5 might already be in right here, and we are at the beginning of a corrective structure. But I do like to say that 29.6K is nonetheless quite an interesting touch. Also because the most common target for wave X is the 382, sitting at 29.6K. We have the 1.618, also at 29.6K. And then, of course, you have the support resistance area, weekly order block here as well. So, yeah, it's an interesting area. The potential short setup here is to enter shorts inside this area over here, with then the stop loss above, trading it to the downside. Of course, market structure so far is still bullish. So make sure you trade safely, sensibly, have your plan, have your strategy, and your entry requirements. requirements. And the invalidation for my scenario at the moment is at 34k, because if wave 3 is extended, which it is, you do not expect wave 5 to be extended as well. So that's why the invalidation is all the way up at 34k. If we then go to the bullish scenario, you can see the move to the downside labeled over here, which is a 3-wave structure, and a 3 waves in W, X, Y, X, and then the last 3-wave structure in wave Z, hitting the rare target for wave Z, which is the 618. However, because we know that on the macro time frame the 0.5 was also here, this is fine. Then this move to the upside is a wave 1. So the green count is exactly the same, but this time over here we have wave 1 up here. So this is all part of a wave 1, and then wave 5 might be finished already, then wave 1 over here might be finished as well, after which we could potentially go into a corrective wave 2. Now I also see scenarios, of course, where I have wave 1 over here and wave 2 over here, but I don't really like that, and I'll explain it later in another scenario. So in this scenario, the end of wave 1 would again be in the support resistance area. Potential short setup is entering the shorts over here, stop loss somewhere safely above, trading it to the downside, where the most common targets for wave 2 are between the 0.5 and the 0.786 FIB, which is basically between 21.1k and 17.7k. Out of these more common targets, the golden pocket is by far the most common, which also has nice confluence with this wave 4 over here for maybe a bit of a liquidity grab before moving to the upside. Stop loss then below the low of Z for this long laddering position, which has potential as well from an Elliott Wave point of view, educational, no financial advice over here, you know how it goes, for then a long trade to the upside, where the targets in this bullish scenario are then the same as the macro scenario, between like 100 and 174k. If we then go to the more local time frame and we zoom into the autonomy basically, or anatomy from this last wave 5. So this is then the green wave 5 ending over here. So what is the structure then of this final wave 5, right? So we see the blue, or you see the blue count. So we have a 1, 2, 3, 4, and then this is a wave 5. Now in this impulse, wave 1 is the extended wave instead of wave 3. Usually it's a 1, 2, 3, 4, 5, where wave 3 is extended. However, it is possible that wave 1 can be extended, and then the targets of a wave 2, 3, 4, and 5 change. So in this particular scenario, wave 1 is extended, therefore the most common target for wave 2 is between the 236 and the 382. Wave 3 does not have any target if wave 1 is extended. Wave 4 most common target is the 236 and the 382, and wave 5 most common target is the 0.618 and the 0.786, pulled with the trend-based fib extension tool from the low over here to the high of 1 to then the low of wave 2. Now in this scenario, that basically means that wave 5 should end between 28.9k and 30.4k, and as you can see, it did wick in this area, and after wicking in this area it started to range, and in my opinion this range is too long to move the wave 5 to the right side. It just doesn't work in my opinion, so that's why the high for me of wave 5 is over there. The potential short setup for this scenario then would have already been hit, at least with the first entry, because the potential short setup would be laddering in this area over here for then stop loss above and then the trade to the downside. With what's gonna happen maybe on the lower time frames, sensibly one could put the stop loss at break even, just in case we're gonna take the highs, which in my opinion is still very likely, and to make sure that you wait and see what is gonna happen. If price does move to the upside, wait and see what's gonna happen over here for then potentially laddering again for the exact same scenario, stop loss above, trading it to the downside. Because my likely to be preferred scenario on the medium time frame right now is this scenario over here, and I'm mainly talking about the corrective structure, but I also put this on the chart just to explain something. So in this scenario, from a more high time frame perspective, this is a wave 1, 2, and then we could have another 1, 2. This is the bullish scenario, so you have a 1, 2, and then another green 1, 2 before then a big 3 to the upside. Now what I don't necessarily like about this yellow wave 2 is that it is so short compared to wave 1. This wave 2 is 23% of the time it took to develop this wave 1. which is very rare. Usually a wave 2 takes at least 38% of the time it took to develop wave 1. So that is not really something I like. But hey, if we look at this impulse over here, this does look nice. It hit all the targets as I just mentioned. And then the potential corrective structure that we're looking for is something that has happened in the past. So this is a bars pattern that I copied from the past. If you want to know how to do that, check out the previous video where I explained that in detail. But what we're looking for over here is basically a three-wave structure, which then could already be finished. Then we look for a three-wave structure to the upside and then a big C down. So we create the first structure is going to be an A, B, C expanding flat. And what is nice is that if I open the confluences over here, you can see that the most common target area for a wave B expanding flat is hitting the 1.236 and the 1.38, with the maximum target being, and also a rare one, being the 1.618 over here. So in this scenario, price would move up to these areas. There's a bit of confluence here as well with the weekly naked point of control and the weekly, for then a bigger C to the downside, which would be very, very nice indeed. And also if I open my target boxes, it would be quite nice, because then we bounce over here to the upside, hit the target box and the confluence, move down through this target box to this one over here that we then also hit for the first time, range a little bit, hit this target box from the other side, or likely we're going to hit the point of control of this range over here. Then price moves down once again to hit the golden pocket area, the most common target for potentially a wave 2, but also in confluence once again with my target box over here, monthly naked point of control, weekly, golden pocket, daily naked point of control. There's quite a lot of stuff happening around this area of 22.6k to 21.8k. There's a nice bunch of support there as well. So it really works with the target boxes as well, which is what I like to see. So this is something I'm keeping my eye open for. Of course, we have to wait and see how price is going to approach this area, which I will explain on the lower time frames. But the potential trading setup in this particular scenario is to enter the shorts over here in this area, stop loss safely above, and then trading it to the downside for potentially a much bigger swing trade. Because now I show you a bullish scenario with a 1-2 and then the green 1-2, where 2 ends somewhere over here. However, this move can also be the beginning of a much deeper move, the bearish scenario, as explained on the high time frame and the macro time frame, to prices of maybe 13-12k. So we have to wait and see what price is going to do after it would hit this point, basically. If we then go to the lower time frame, we're basically zooming in to the scenario I just showed you with the bars pattern, where this is what I'm looking for. So the end of wave 5 over here, we have a 3-wave W, X, and eventually a wave Y in 3 waves as well. Now in this scenario, the most common target for wave Y is between the 1 and the 1.236, taken from the high of 5 to the low of W to the high of X. And as you can see, we wicked into this area very nicely, for the potential trading setup being to ladder the longs in this area over here, stop loss below these lows, trading it to the upside. What I don't really like is that we missed out on hitting this target box, not gonna lie. So yeah, this target box was sitting at 27.162, 226.936, and we just missed out, as you can see, on hitting this target box. So if it would come down again before going to the upside, I would like to see a bounce at the target box. However, at the moment it did move up quite a bit, so at the moment I don't expect it to come down and hit this target box for now, but of course we wait and see. What is important to note though is this comment over here. This potential short setup is going to be invalid if price is moving up in an impulsive structure instead of a 3-wave structure. Because if this is a wave A, which is 3 waves, WXY, wave B also needs to be a 3-wave structure, because an expanding flat is a 3-3-5, which means that we are going to be looking for a 3-wave structure in the B. And if we just keep pushing, this short setup is not a valid setup from an Elliott wave perspective. And that is very important to note. So only if we see 3 waves over here, this potential short setup is going to be valid to enter the shorts over here, stop loss safely above, trading it to the downside. Another thing that I like to mention as well is the news that we have. So if I quickly refresh my page over here just to be sure, and I refresh it again because the times are not correct over here, there is news coming. So today, Wednesday, the 5th of April, this is Central East European time, so you got to check your own time zone, but there's news at 4 p.m. my time, Central East European time. High impact news. I only look at these red flags over here. Also Friday is going to be an interesting day, and news can equal volatility. So as you can see, I have a vertical line on my chart with an alarm as well, which is the way I always like to put news on the chart. So the moment the alarm goes off, I know, okay, we might now have some volatility kicking in. And I think that is a good way to represent news on the chart as well. So make sure you trade safe around at least 4 p.m. Central East European time, because volatility might be increasing. I hope this video was helpful or valuable to you. I'd like to thank you for watching and subscribing, and I will see you at the next one. Bye bye.